Hello, this is Quayne and I'm the director of CWF Groups, and today in this video blog I'm supposed to talk about servicing, but just off topic because a lot of clients have been asking me a lot about this really urgent question, and I've been providing solutions. I thought I'll share it out to you. Is what happens when you have bought an off the plan property and you bought it 2 years ago, but right now you bought the property and the valuation is low. So how do you solve that? So in this video blog, I'm going to talk about valuation, and in particularly, how do you get it to settle? So people who are experiencing this are mainly people who have purchased an off the plan property 2 years ago. They might have purchased in Sydney, Melbourne, Queensland, or interstate, including Perth. I've got a few clients from Perth. And say 3 out of 5, maybe 2 out of 5 are experiencing low valuation. Primarily because the project they've selected, the banks are being really critical with that area. It could be high density, it could be the fact that there's a lot of foreign buyers who are offloading these properties off into the market. There's an oversupply of this property. And you heard about foreign lending has been capped. 2 years ago it was really easy to get foreign lending. Right now, if you're not got the right visa or you're not a resident or all, there's no more lending. So there's a lot of stock on the market. So what happens? The banks retracting from their lending and looking at certain postcodes and blacklisting of certain postcodes. But how the main thing that I want to talk about in this video is how do you get past and settle on a low valuation property, which really ties into servicing. And the thing that I want to talk about is mortgage insurance. So a lot of people have been asking me, what is LLI and why would I need mortgage insurance? Well, the thing is, a lot of banks have probably approved you on an 80% loan. Now, because the valuation has dropped, you can opt for a 90% loan, including mortgage insurance. Now, a lot of banks have capped it at 90%, including mortgage insurance. What does that mean? What that means is, in this 90%, there will be a portion of mortgage insurance. Now, mortgage insurance is added onto the loan that will cap it at 90%. To give you an example, a really simple example, let's just say a property in Queensland was for $520,000. Okay. Now, the original loan at 80%. Okay. If you can do your maths with me, 520 times 80%. That's $416,000. Okay. And this was approved originally by the bank. Valuation came back at $480,000. Okay, which means the bank would lend. Do the math with me. 480,000 times 80%. That's 384,000. 384,000. Which means we are short by minus 416,000. $32,000, which the bank is not going to cover, and which you, if you want to borrow 80% without mortgage insurance, you need to fork out. Now, a lot of people who have purchased 2 years ago, they've probably budgeted, it was already tight to put in the 10%, say that the other 10% plus the stamp duty, they don't have $32,000 to settle on this property. And the worst thing is, usually developers will allow valuers to go in and value the property usually 3 weeks before settlement. So you got 3 weeks to come up with funds of 32 grand to settle. Now 3 weeks to come up with 32 grand, which means 1 week you got to find 1 grand, 10 grand. That's impossible. So what happens? What do? Let's do it at 90%. So what does that mean? So you get 480. Okay. 480 times 90%, do the math with me. So that's $432,000. Now that's looking better now, right? Because originally you were expecting $416,000 for the loan. Now you got $432,000. Now you don't necessarily need to go up to 90%, okay? Because the higher you go in terms of lending towards 90%, the higher the mortgage insurance premiums, okay? But if you go, say you want to just say you want a loan for 416,000, right? So you get 416,000, 416,000 divided by 480, which the bank came back. Your lending is only 87% to round off. So now it's looking better. So this video blog post is basically to let you know that you can utilize mortgage insurance to settle on a property. But this all ties in with servicing. Okay, if your servicing is not there, all right, if your servicing is just enough for this, okay, how are you going to squeeze out another 7% of lending for yourself to settle on the property? Which goes back to the last two videos I've done. That's how to improve servicing and how to be careful with servicing. So, in summary, if your property has gone down in value, and it might not be reflecting the market price, it's just the banks are being conservative. So they deliberately value it lower, consider mortgage insurance. Now, mortgage insurance is usually 2%. So just as a tip, when you're thinking about borrowing, even if you get 90%, okay, 2% is capped onto the loan to make it 90%. So at the end of the day, when you settle, you only have 88% from the bank. 2% goes to the mortgage insurer to make sure the bank's protected because you're borrowing over 80%. They're taking insurance against you defaulting. 2% goes to the mortgage insurer, which is usually QBE or Genworth. So at the end of the day, when you're settling with your solicitor, only 88% of the funds will be there. So technically, even though the mortgage insurance is added onto the loan, you are actually paying for the mortgage insurance indirectly because you need to come up with 12%. So if you already paid 10%, then you need to find out the other 2%. Now, 2% of what do we say was 90%. Let's say the property was 430. 430 times 0.02. 430 times 0.02 is about $8,600. That's better than you trying to find $32,000. Plus, if you fix it at principal and interest, you can get it at 3.88%, which again is problem solved for most of my clients. Again, if you are using a broker, do ask them to get a second valuation for you. Okay, so maybe you don't need to use mortgage insurance. Just you get a second, third, fourth, fifth, keeps on going. Valuations to go in to value the property. Obviously, you have 3 weeks till you settle, so you better get cracking and pushing for another valuation to get a higher. Look, at the end of the day, property, like everything, is a long-term plan. So even though the valuation has come up short, don't be disheartened. You know, in the next 3, 4, 5 years, you might see it going up. And like I said, it's just the bank's valuation. It doesn't reflect the market price. So in all, if you have any more questions on how to get past this hurdle you're experiencing, or maybe your friends are experiencing, give me a buzz, private message me. And all in all, stay tuned to our next video podcast. And if I don't hear from you, keep calm and mortgage on.